Brent, I have to start with you because your name was mentioned by every panelist at the last talk, probably 5 or 6 times. And so we were discussing the theme of de-dollarization, right? And we were talking about global trade trending away from US dollars. We were talking about countries' reserves trending away from US dollars. And it's a seductive topic, right? Because it falls into the, sort of the doom and gloom or the crisis narrative that the world's changing dramatically so. What's the other side of that argument, if you would just simplify it like that? But what's your take on the concept of de-dollarization? We'll start from there and then jump off.
Yeah, I mean, I tend to think that, well, first of all, the panelists that mentioned me, I thought they were very nice and generous. So I appreciate their comments. De-dollarization, I think, is a real thing in theory. In other words, it's definitely out there. People are definitely talking about it. Countries around the world are trying to figure out a way how to do it. I just don't think the success is there. And it's kind of the difference between desire and ability. Right? There's no question that people are trying to figure out a solution, but it's really, really hard to just say you're going to switch for all the reasons I've detailed on many presentations. The other thing I'd say is one of the things that kept coming up was that the de-dollarization would be potentially happen in the future, but what's already happening is a change in the global reserve asset. So you could keep the dollar as a global reserve currency for a long time, but people just no longer store their money in dollars. And there's some truth to that, but I think people say they're going to stop buying treasuries. Again, there may be some truth to that, but they are not going to stop buying treasuries and keep buying Italian bonds and Australian bonds and Canadian bonds and Russian bonds and Chinese bonds. So I do believe we are going to have a sovereign debt crisis, but I don't think it's going to be because everybody just sells treasuries. It would be because they're selling gilts and BTPs and French oats, and all of the sovereigns get rejected as opposed to just treasuries.
Real quick break here, guys. If you are a mining investor, you are without question familiar with the Golden Triangle region in British Columbia. This is one of the most prolific mining regions in the world due to its vast deposits of gold, silver, and copper. Now, for the last 4 years, Dolly Varden Silver has been busy expanding their high-grade silver deposit in the Triangle, and they are backed by some of the smartest investors in the silver business, including the legendary Eric Sprott, Hecla Mining, US Global Investors, Fidelity, Delbrook Capital, Sprott Resource Corp, and more. If you are curious why the smartest money in the silver business is cozying up to Dolly Varden Silver, then hit the link beneath this video.
Okay, now one thing you mentioned there, it's essentially to summarize, it's cool to have a vision, but actioning that's a whole different story. So we can talk about de-dollarization, but doing it's a whole different thing. Danielle, I saw you nodding your head when Brent was talking about that, so I'd love you to chime in.
So pop quiz, what was the last currency that Saudi Arabia issued sovereign debt in not too long ago?
About 50 billion in US dollar bonds.
Thank you.
So what is the resistance? Because, and this is really, really important because there's a parallel narrative occurring right now in our world, right? I would say on the back of the renewable energy trend. Like everybody loves the promise of renewable energy, who wouldn't like that? But to accomplish those goals, we have to extract a ton of ingredients from the earth that we don't presently have right now. The jump from one to the next is a lot harder than just thinking about it, right? Setting the vision's easy and fun, doing the work's a different story. So what is the resistance, Danielle, to the de-dollarization trend?
Well, I mean, I don't think that there's resistance as much as there's just a recognition of practicability. And that really is what it comes down to. And look, people bark all the time about China's not buying as many treasuries, and I'm like, China's not selling us as much stuff. So they don't have as much to put back into treasuries. They'd prefer to have more treasuries, I will tell you that much. So this idea, I mean, I think one of the bigger events of 2024 comes in June with the election in Mexico, with the presidential election in Mexico. 6-year term, fabulous opportunity to continue moving that supply chain away from China. And it wasn't but 2 years ago that everybody was saying China's economy was going to be bigger than that of the United States. It's gone in the exact opposite direction, the exact opposite direction. China shrunk on a relative basis. So they're at risk of no longer being the second biggest economy in the world. And who would have thunk that? But they don't have reserve currency status, and they have grown on the back of debt, and they don't really have an outlet.
I love how you brought up the other side of the balance sheet, because yes, they're buying less treasuries, they're taking less cash in, so they're spending less money, and that's
that's the thing. People are always like, oh, the supply chain disruption caused inflation, and I'm like, well, isn't there demand? Didn't we helicopter money like $10 trillion to people, and weren't there lines around Chanel and Gucci? I mean, some of it's demand. You have to look at both sides of the equation. You cannot just isolate one. And look, this situation in the Suez, it could cause higher prices because of global shipping rates going up. But, my grocery, I was tweeting about this yesterday, my grocery store circular is it's bigger than what it was pre-COVID. There's more on sale, whereas at the peak of COVID, it was one page back and forth. So the thing is, it's going to run into a wall. You can try and raise prices as much as you want, but listen to all of these earnings calls. There's a simple thread that's running through all of them, and that's we're losing pricing power. We can no longer raise prices. That's what happens in recession.